Hello friends, welcome back. This week we are going to talk about two companies. Which I got some requests from our team, our community. So I thought of let's explore those companies. And the companies which I'm going to discuss are mainly for education purpose. And I am not personally invested in these two companies, but I just want to review and give my opinion about this company. And let's get into that. This is Sundar, and you're watching Mindful Finance. The first company we are going to talk about is Markshans Pharma Limited. It's a global leader in a pharmaceutical with a remarkable journey from a humble beginning to industry prominence. So let's check in detail about how strategic decisions and innovations turned this company into a global powerhouse. So Markshans Pharma's story began in 2003 as a small operation in Mumbai with just 50 employees. Over the next decade, they expanded their reach into regulated markets like UK and US, skyrocketing their revenue from $10 million to $100 million. And in 2016, a game-changing acquisition of Teva's Bell facility from UK and doubled their production capacity. So this is just a tale of ambition, strategy, and relentless growth, and is an inspiring blueprint for success. So investing in the future has been Markshans Pharma's mantra. With a $50 million investment in R&D, they have built a portfolio of over 250 approved formulations. So investing in future has been Markshans Pharma's mantra. So with a $50 million investment in R&D, they have built a portfolio of over 250 approved formulations and recognized among the top 50 generic pharmaceutical companies globally. And Markshans demonstrates how innovation is the key to sustainable success in a competitive market. So Markshans operates across 50 countries, delivering essential medications to major markets like US, UK, and Europe, with a product portfolio spanning pain management, allergy care, digestive health. So they cater to critical healthcare needs globally, all while maintaining a debt-free status and a commitment to sustainability, which is a very, very, very important point. Thinking of the growth strategy to fuel the next phase of growth, Markshans is leveraging the rising demand for generic in the US and exploring new European markets through strategic acquisitions. They're also scaling up productions with investments in greenfield projects, aiming to not just grow but lead with sustainability and innovation, which is going to be the future. So checking about the finance thing, Markshans Pharma's financial performance, if you see 20.8% year-on-year revenue increases, 37.7% rise in year-on gross profit in year-on-year, and a 16.6% growth in net profit. So these numbers clearly underline their operational efficiency and market resilience. A debt-free balance sheet further it solidifies their position as a financially sound and sustainable player. When you're checking about its geographical position, did you know that nearly 45% of Markshans Pharma's revenue comes from US? The UK, Europe, and Australia are also major contributors, showcasing their diversified global presence. So the geographical strategy shields them from market volatility and positions them for sustainable growth. Markshans is not just a pharmaceutical company, it's the forward-thinking innovator, from doubling their production at the Teva facility to launching 12 new OTC products. OTC means out-of-the-counter things, so like a lot of medicines you can go and buy without any prescriptions. In US, those kind of medicines are very rare, or rare in the sense very difficult to get. But these companies, Markshans Pharma is focusing mainly on the medicines which can be given in the OTC way. So that is very, very important. And the next major thing is the main the facility which they acquired, which is Teva's Bell facility in UK. The main medicines they manufacture are related to migraine related. So when you say migraine, which is the global problem that every individual faces nowadays, and so that is a very, very, very strong medications, gives a more revenue for this company. If you see, as I mentioned earlier, almost like they're spending 45 crores annually for the R&D development, which is almost 2.1% of the revenue. And if you see, they are also making inroads into new European markets, so ensuring a robust pipeline for the future growth. Looking at the competitive advantages, so what really it makes Markshans stand out in the crowded pharmaceutical, because pharmaceutical is a worldwide demandful industry, right? So it's the main thing is it has a global reach, its operational efficiencies, and strategically they're located. and the Teva acquisition are the ones which enhance their production capabilities, which are enabling them to stay ahead in the cost competitive and industries. If you look at the growth perspective, so looking ahead, Markshans Pharma aims to triple their revenue within 2 years by scaling up production and penetrating new markets. With an ambitious goal of 3,000 crores in revenue, they are well on their way to becoming a global leader. So, but the next one is important one, which is like if you are thinking about this company, you need to think about the risk. So every success story has its challenges. So Markshans faces risk from the common problems across pharmacy, which are like the regular compliance and the pricing pressure, raw material issues. So these are the very key risk factor which is across all the pharma companies. As an investor, the takeaways like what I feel about this is why it's a compelling investment and it's a strong is main reason. First thing is very strong fundamentals, debt-free company, and they have a very clear growth strategy. So with their eyes set on becoming a global pharmaceutical leader, Markshans offers a unique opportunity for investors seeking value in competitive industry. So if you are a value investor, you can focus on this one. Getting detailed, little bit drill down into the investment rationale. If you see, most of the investors look at strong fundamentals, right, and the clear growth strategies. And Markshans Pharma checks all those kind of boxes, and their diversified portfolio and the consistent revenue growth, the solid strategy, visions makes it stands out a good value for money, and this is the right opportunity we can see in front of us. So next, let's get into the technical of this one, which whether it's the right time to invest. We can see value wise it is good, PE wise it is good, PE wise little bit higher side, but let's see the technical part of it. So if you look at the Markshans Pharma's technical chart, you see the long term trend. If you see, it was like it consolidated for a long term, okay, and I was following this for a very long time. I had this thing in my list also. I marked all this thing earlier. So when there was a breakout happened here, right? July. Actually, I waited for this one, but I missed this one. But if you see, it has given a very good return. It has given a very good breakout from this pattern. And now if you see, the only challenge what I see is, so if you see 1, 2, 3, 4, fifth wave, okay, it's almost achieved now, and I'm expecting a correction of 61% level, this level, which is 298 or 296, or this level 278. So these are the levels I would feel that good time to enter. If it falls further, wait for it. If you have a FOMO, but just check with your finance advisor, and you can start to add very small quantities. But I don't know, like, it's up to you. Okay, actually I missed this to enter here, this particular area. Okay, this is for me. If you say this is the right time I should have bought, but I missed it. It went up, so I'll wait for. Patiently I will wait. If it comes down to this level, then I may enter it. So next company which I'm going to show you is talk about is Mothersonsumi. It is called as Samvardhana Motherson International Limited. So I'm going to talk about this company. This is also was on my list. Actually, I invested in this thing during the COVID time. It went very well. I'll give some insights about my past experience later point of time, but let's get details about this company. So if you see Mothersonsumi as a fascinating story of evolution. It was founded in 1975 as a small trading business. In a short form, we call it a SAMIL. Has transformed into one of the world's largest automotive suppliers, and they're driven by vision of global diversification and innovations. If you see, in 1986, they partnered with a Sumitomo wiring system, which actually is a game changer that brought advanced technology to India. So from their IPO in 1993 to their global expansion in 2002, the Samil's journey reflects strategic brilliance and relentless ambition. Let's get a deep dive into the financial thing. Samil's financials are as impressive as their growth story. Almost 98,000 crores in revenues with a 25% year-on-year growth and an 82% rise in the profit. Their return on capital employed stands at 17%, underscoring their operational efficiency, because they are not employed a lot. Like they employed very less only, and they have into a very diversified portfolio. So on their net profit is, as I mentioned, it's going 82% year on year, and their EBITDA performance is 46% year on year, and the net debt to EBITDA is just 1.4x ratio, so which shows its financial strength. So with over 400 facilities across 41 countries, Samil's footprint is truly global. So their diversified portfolio spans wiring harnesses, premium vision systems, and emerging businesses in aerospace and medical devices, catering to both automotive and non-automotive markets. If you see, they are a very leading OEM manufacturers for EV high voltage harness system, which is like their wirings and their components are installed in automobiles, okay, and which is nowadays EV cars are coming up, right? So which needs to handle a high voltage thing. So for that, their wirings are helpful. And when you talk about vision systems, the rear mirrors, when you're checking the back mirror, and also they're having a multiple cameras, okay. So which helps the driver to look at visually all around the space. So they are into all those visual related technology as well as, and modules and polymer products. For example, they don't need to they like one by one part. Everything comes with like a module. You just plug and play kind of a thing. So they're into that part, and as I mentioned, they are into all the emerging businesses in EVs and sustainable way of transportations and stuff. Okay, and looking at the strategy initiatives, they acquire almost they made a 16 strategy acquisition in the year of 23-24, combined with the 18 greenfield projects, which reflects their growth momentum. So they are expanding into high potential areas like EV technologies, and I forgot to mention they are into medical devices and logistics solutions also. Samil thrives on they have own strategy called 3CX strategy. What is the 3CX strategy? Which is like ensuring no single customer or country or component contributes to the 10%, more than 10% of revenue, which means this 3C, which are called as customer, country, and component. So it should not, that should not be a kind of a dependency that which brings more than 10% of the revenue. So that's the way they are diversified in a different location, different components they are focusing on different components, they are focusing on different countries. So that is what this 3CX 10 strategy is about. So which is their strategy they are following, which seems very effective for them, or everybody is learning also that thing. And they are into manufacturing of ICE, right? We say ICE chips for automobiles, hybrid cars, EV platforms. All those things they are preparing, manufacturing, or providing technical support to those areas. And looking at that operation efficiency, they acquired businesses, different businesses, as I mentioned, like 16 acquisitions they have made to make sure their operational excellence also to go good, and also they are globally available, Europe and US, everywhere their presence is there. Looking at their Sawmill is targeting $33 billion in revenue by 2025 with a focus on non-automotive expansion and sustainability. The reason is, I'll talk about the later. And their ambitious goals include carbon neutrality by 2040. Making them a forward-thinking player in global manufacturing. The one which I mentioned, non-automotive expansion, like more into medical devices, logistical thing. The reason is, see, they are into main of their focus seems to be like earlier it was more of an automobile-based one and an EV-based one. So since it's an automobile-based one, automobile is already a cyclic sector. Okay, on the top during the COVID time, there was a shortage of chips. You would have heard about that one, which really affected this company. So that was the time I held this company, and there was a split happened from Mothersonsumi to Mothersonsumi wirings kind of a thing. So two stocks the stock company came out. So that was the time I was holding, and the Sumi wiring I got for some 48 rupees or 50 rupees at the time. I'm not able to recollect. So that time I exited the stock. So that was the time I exited, and I didn't enter later point of time, because the main reason was automobile was booming at the time, but this particular, because of the chip deficiency, the company was failing. So this kind of a dependency created a kind of a noise. So that is why I exited in the company. But yeah, when a technical comes, we'll discuss more about that part. So overall, if we talk about their investment point of view. Samil has a proven record. Okay, so they have made 31 plus acquisition including Yachio and Dr. Schneider. Okay, so Yachio is a subsidiary for Honda. So they acquired Yachio and Schneider also. So which are giving a robust revenue, because this was a big acquisition for Tamil, so which has given a very good revenue for them. And as I mentioned, they are very resilient. They have business model they have, which is a 3CX10, and which is really giving a good revenue. And they are trying to diversify their portfolio, as I mentioned earlier, not just a automobile. They are trying to increase more in non-automotive sector also. Okay, and also they are focusing on the sustainable value creations. By 2040, they want to be a carbon neutral company. So these are the main takeaways from this company to be invested in this company. And as I mentioned, the risk. Let's talk more about the risk now. I already mentioned about why I exited this company. Recently, even though it acquired the company name HEO, like it will take another 24 to 36 months to solve or stabilize that company. Okay, there are different. It is around different countries, different places, different cultures. So everything has to come together and act as a one vision and one goal kind of a thing. So that may take some time. Let's see. Okay, and there is going to be a tremendous transformation going to happen, which is EV based model. But currently it is not stable. Like people are still confused whether to go with EV or hybrid. All those things are happening, right? So that adoption rate is very less. Okay, for example, we see uneven 45% in Europe versus 15% in emerging market. Okay, so in Europe it is 45%, but in other countries, other places, it's just 15%. So that adoption is not happening. So even if you think in India itself, you just imagine like how many of them move to EV. So it will take some time. Okay, so as another thing is the cyclic nature. I told right. Take about the macroeconomic. There is the interest rate hike happened. Semiconductor shortages issues, Russia-Ukraine conflict. So all these things create a panic. So that is where the time I exited. Again, I'm telling that one. So those are the risk you have if you want to invest in Sumil. So let's check the technical part. If you look at the Mothersonsumi, if you see how it fell, this is the 2020 time. You see, this is the time it fell very badly because of the chip shortage issue. It fell like anything, and then it went up, and again it fall. So now it is going up. You see the wave pattern 1, 2, 3, 4. So fourth wave is almost done. Okay, there is a chance maybe slightly it may dip still here for 150 rupees. Okay, if you want, as I mentioned earlier, check with your advisor or keep adding small into this one. And I feel there's a potential chance of 40% or 46% from the current position, which is 244. Okay, we can expect that kind of like 40% for the short term thing. Okay. So if you want to focus, just think about all those things. It will take time. It is not an immediate one. But daily, if I see, so RSI is below 30. Okay, so still it may fall, as I mentioned, right? It may fall till here also. This is 150, or it may go to 130 also. That's a chance. Okay, so you have to think about that one. So in summary, if I ask, both Markshans Pharma and Tamil both are demonstrating a powerful stories, right? It's emotional. The way the company grown are very organic, and it took time. It's not a new companies, right? Markshans Pharma, at least you can say it's a new company, but Sumil is a old company. But both are kind of fundamentally a strong company. One is an automobile, one is in a pharma. Pharma is a competitive world, but it's a safe bet. This is Sumil is into automobile sector, which is a cyclic nature. So that is the only thing you guys need to have in your mind before getting into this thing. Hope you like this video. If you like it, don't forget to leave your comment. Don't forget to press the like button and subscribe button. And don't forget to share with your friends and family. Thank you.